Good afternoon, Kuala Lumpur. And good afternoon, Wild Digital. It's been such an eventful day, hasn't it? First and foremost, I'd like to take this opportunity to thank all of you that's still with us. We have the toughest, or should I say, we actually have the second toughest slot of all in the whole agenda, because I think the toughest one will probably be the one standing in between you guys and lunch, because hungry and angry people are obviously not happy campers. And right now we find ourselves right smack before the evening cocktails, so we'll try to keep this lively for you guys. Now, first and foremost, I'd like to take this opportunity to introduce the members of my panel. On my left, I have Mr. Michele Ferrario, co-founder and CEO of StashAway. And to his left, I have Ms. Ashley Khoo, Senior VP, GM of Send from MatchMove. To her left, I have Puichan Gan, who specifically asked me to refer to her as PC, to keep it simple. Welcome, PC. She's the country director at GoBear. And lastly, on the extreme left, we have Richard Eldridge, who's the co-founder and CEO of Lendo. So join me in welcoming the panel to the stage. Okay, first off, before we jump into the topic at hand, before we tear ourselves apart, why don't I give each of you roughly about 1 to 2 minutes to tell the audience about where you guys are from and what you guys do. Let's start off with Michele.
So good evening, everybody. As Remy mentioned, I'm the co-founder and CEO of StashAway. StashAway is the leading digital wealth management platform in this region. We're based in Singapore. We help people invest their money in a cost-effective and very intelligent way and build over time their wealth with us. And I'll stop here, so we have only 1 minute, right?
Okay. I am Ashley Khoo. This is an interesting topic for me because previously, yes, in banking as well, now in Fintech at MatchMove, whereby we are a B2B player in payment solution platform for growing businesses. I think I'll stop there and then we can go on with the discussion.
Awesome.
A little bit about GoBear. So GoBear is the only unbiased comparison site in Malaysia, probably also in Southeast Asia, mainly focusing on financial products and also insurance products.
Hi everyone, my name is Richard Eldridge. I'm the co-founder and CEO of LenddoEFL. We started in 2011 with a bold mission of helping 1 billion people around the world get access to financial services. We do that by allowing financial institutions, both incumbents and new age players, to use and leverage non-traditional data to make better decisions that allow them to then push the right product to the customers at the right time.
Right. So being the last session of the day, please don't go easy on these guys. I'd encourage you, give us your toughest questions. Go to your Slido app, go to the Slido website. Give us your toughest questions, and we'll try our best to pick the best ones to give our panel speakers a bit of a challenge today. And before we do that, let's dive into today's topic at hand. Fintech, friend or foe? Why don't we start off with Richard?
So from my perspective and our perspective, they're friends, but they can also be foes. From a friend perspective and the way we look at the world and our previous backgrounds, that we're actually a B2C business challenging the financial institutions. If we take, and let me take one small part of financial services, which is the lending ecosystem, there's a number of elements you have to be very good at in order to be successful. You have to be good at origination. You have to be good at underwriting. You've got to be able to service the loans. You've then got to be able to collect. You've got to be good with regulation, and you've got to be good with getting access to affordable capital that you can put to work. And when you look at those 6 elements, you've got to be good at nearly all of them, especially in markets where the transaction sizes are small and margins are wafer thin. So what you look at is where across those Do you think there are opportunities for traditional financial institutions such as banks and insurance companies to take advantage? And where are there opportunities for fintechs to be able to actually leap ahead and gain competitive advantage? And can they do that across all those 6? From our viewpoint, we work with both the new age players such as the peer-to-peers and the non-bank financial institutions that are digital first, as well as the traditional financial institutions. We see that early on, the origination side has really been won by the digital native first new age tech players. They've been much more aggressive, done a much better job at bringing new UX, UI, and digital experiences to the end customer and making, number one, costs lower, but number two, experiences much better. Countering that, if you then talk about cost of capital or servicing cost in a lot of countries, the traditional players have a distinct advantage. They already have the rails in place. Because they take deposits, it's easier for them to actually lend out at a lower cost. So I think when we look at and being agnostic to either player, we really say they are our friends from the way we operate. We're a B2B business that operates agnostically with the traditional as well as the new players. But I think for the overall industry, the fact that you've had innovation in this area is now meaning end consumers, whether they're corporates or individuals, are starting to, number one, get access to services that they never got before. Number two, they're getting it cheaper. And number three, they're getting it more conveniently, which is a good thing. So to me, I'm agnostic either way. I think there are advantages that either players had. We sit in the middle, and I'm on the fence on this one.
All right. We'll take a pause there and revisit that later. PC, friend or foe?
I would have to say, initially when we approach bankers and insurers, they would always look at us as foe because it's a comparison site. So you're going to strip us naked and you're going to compare all our strengths and weaknesses. However, so let me share something with you. Before the election, did you know that, I mean, of course everybody knows that the petrol prices has been fluctuating, but after that, it's all been stable. And because of the unbiasedness of the site, we've noticed that 44% drop in petrol cards, and they move over to lifestyle cards. But as a banker, you probably wouldn't know because you are looking into how do I market my cards, how do I market my other financial products. So with this data and insight that we share, I always like to quote from this marketer called John Wanamaker. He always says that 50% of my marketing spend are wasted, but wasted on what he doesn't know. So, but with these insights, you'll be able to market your product a lot better. So that's what makes us a little bit different because we provide insights that you never know because you're so focused on your own products.
See, interesting. How about you, Ashley?
So from experience, 2 years ago and now, it's very clear cut. When I walk into a meeting in a bank, it's like someone's going to come out dead. You know, it's 1 hour meeting. But now when we talk to the bank, you can feel it's a totally different approach. The experience is different. They come to us, they're like, we have this problem or this client want this. We can build ourselves, but it seems like you have something complementary. Can we work together? And that's where you start to see a lot of fintech arms in banks itself. I think initially a lot of people thought that the fintech arm is to compete against the fintech. But what I noticed when I talk to more and more of them is they are looking for partnership. Because before the fintech arm came about, the conversations were going nowhere. It's always a roadblock, it's always a gridlock. But they are seeing that what the fintech is doing after a good 2 or 3 years is that they're very good at customizing the customer touch point, the front part, whereby it's evolving at a rate whereby it's so fast, nobody can, even us, the fintech is having a hard time keeping up. What about the banks? So people, I think different stakeholders are realizing you are good at this part from the middle to the front, and then we are good at the regulatory part, the risks and compliance part. Maybe there's room to work together. We should all advance together. So nowadays it's a better atmosphere when we all meet up. I think there's actually excitement. So I'm going to say that everybody is moving towards the friend part. Yeah.
Right. So the score now is friend, friend, friend. Michele, do you have an opposing view?
So let me take a different approach. So what the topic says is friend or for, but it doesn't say for whom. So we are all thinking that we're looking at it from the bank's perspective. But what I'm going to say is that it's definitely a friend for all of us, for customers, meaning that banking, and in particular wealth management and kind of investing, has been probably the industry that has been touched the less by technology in the last 10 years. If you think about how your life has changed across, the way you hail a cab, the way you watch a movie, the way, many, the way you search for a restaurant or whatever else, or you book a hotel, the one thing that has changed the least is the way you invest your money. And I think technology can provide a huge change in the quality of the advice you receive and a huge reduction in the cost that you will incur by leveraging those services. So I think it's definitely a friend for customers. Now, from a bank's perspective, friends or foe, it depends, right? So the business we have heard so far, they all work somehow with banks. So they have some sort of collaboration, they maybe make revenues out of banks. We don't. We are a B2C player. We actually go straight to customers. And therefore, a lot of banks see us as competition, and rightly so, meaning that we believe that we are improving dramatically the quality of the service in investments and wealth management that any bank can offer in Southeast Asia today. At the same time, I do believe that certain banks may want to look at us as potential partners, and there are ways to work together. And so I think it's a question for the banks more than for us. For us, today, the focus is just on making sure we provide the best potential experience to the customers because we believe that paying 5% entry fees for an investment product is outrageous.
All right. So that's leaning more towards friend or leaning more towards foe?
I guess just to make the debate interesting, I'll say foe.
Okay. So we have a few interesting questions up on the screen right now. Let's see if we have any. Okay, let me pick out one or two that's interesting to ask our panel. Okay, let's start off with the first one. If you had to merge or acquire a competitor, who would it be and why in your respective markets? Okay, how about we start off with Michele first? If you could buy anyone in the world.
So it's too early for us to think about merging or acquiring. We just raised our Series A. We raised a total of 11 million Singapore dollars so far. So I think we're early to be thinking about that. If we were at a different stage, what I would probably think about is not acquiring a direct competitor, but rather either acquire a player that can help us interact with customers. So maybe somebody that has leveraged data with customers and built a relationship with customers, or somebody that can extend our product line. I don't have a name in mind because honestly that's not something I'm thinking of, but I would not think about buying somebody doing exactly the same thing, but rather buying somebody that can extend either on the product assortment or in the way we interact with customers.
Ashley.
For the same question, whether to merge or acquire, definitely merging right now doesn't make sense for us. Acquiring is something that's on our mind, and when we acquire, it's for something complementary. Whatever we do for our core in terms of a payment solution platform, that's fine, and we are doing R&D and we continue doing on that. However, there are certain services we see like topping up. It's not our core. There are distributions out there in each local market that we can look to work with or acquire. There are some new players, so that's what's interesting to us. So in a sense, we are looking for, well, we're not actively looking for, but whenever there are players that comes around, we would think in a perspective. Another one beside, the O2O cashing out, like offline to online cash in and top up. The other area would be like biometric. Because in payment solution, in terms of identity verification, that's very important. There are many interesting startups that comes up, doing identity verification on the blockchain. So anything that's complementary to our core businesses, it's always a thought about acquisition.
So PC, there's obviously quite a number of aggregators in the market. If you could buy over anyone, who would it be, or would you even do it?
I think all the other aggregators behave in a very different business model. For ourselves, because we are unbiased and because there's so much of data and insights that we could share with our partners, I actually look more in a sense that we could work with or merge with somebody who does more financial planning. Reason why I say that is because we've got lots of people coming onto us asking us that, hey, this is my income, these are all my fixed commitments, how then do I grow my wealth in terms of all the financial products that you have? With that, we also have all these other insurers where you have got investment plans. So I think we will work very well with people who does financial planning in that sense. So competitors, not so much, but merge with somebody who would complement our business.
I see. And earlier when you said that you guys are an unbiased aggregator, what does that mean? Does it mean that a bank can't, for example, pay to be a featured product? Or how does it work?
So the main feature on our site is that we actually have got product coverage and we've got product scores as well. So what we do is, so say for example, credit cards. We would look at balance transfers, we would look at annual fees. So all of these things that people are looking for, we would put them out on a normal distribution, compare it with all the cards that's in Malaysia. With that, it helps consumer to see which cards are suitable to my needs. It's also broken down into a couple of pillars, where if it's a lifestyle card, then it's there. So if, let's say, for example, we were to work with Bank A, unfortunately, you can only probably buy a banner space to appear on the first fold, but we would not manipulate our scores.
I see, okay. And the question is now posed to you, Richard, if you could buy over somebody.
So we actually went through a merger and acquisition at the end of last year. So maybe let me take a different view. What did we think about when we did that? And we had a lot of discussion with our advisors and our board around, are we too early? Where does it make sense? We looked at a number of things, and we were looking for how can we make 1 + 1 = 5? Not just adding the revenue on, not looking for cost savings, in fact, but looking for revenue opportunities. And we came across it, and we built a really interesting matrix that looked at, is it a new interesting data source? Can we build better models? Is there geographic expansion we can move into quicker through upsell, cross-sell opportunities? Is there new innovation we can do by having a stronger management team? By being a bigger scale, does it open up new opportunities that we wouldn't be able to enter into anyway? And we kind of ticked all those boxes. So if we were to do it again in the future, I think it would be a similar box. We've just finished the post-merger integration, and there's nothing on the horizon right now.
All right. Okay, the next question I'll ask my panel is, I'll mishmash some of these questions together. So the question I'll pose to you guys is this: if you had the opportunity to be acquired by a bank or financial services company, would you think that would stifle innovation for you guys, or do you think that you guys would be better off not being part of a bank? It's open to anyone to jump in.
I think in our case, because we are, our customers are not the bank, but the customers, the devil is in the details, meaning that it depends what an acquisition means. Is a complete acquisition that where the company gets absorbed by the bank? Is it something that will keep it as a satellite business operating by itself for a few years? The reality is that we're very early. So if you absorb a company like ours in a large institution, you probably slow down innovation significantly, but you can at the same time decide to kind of leverage the bank reach and make it grow a different way. So I think the devil is in the detail. The devil is in how you structure the management after the acquisition happens.
Anyone have any more to chime in on that?
I think one of the quote kind of says what I think. It's, we didn't come so far only to come so far. To be acquired by a bank now, I think we didn't finish what we want to fulfill as a mission. I think a lot of people who join FinTech, we want to see it to the end. Nobody can guarantee. It's not a guarantee. But we do it for more than, there is a purpose, there was a reason. So that's what is very important for FinTech. It's you have to know why you're doing it, what value you're delivering. And when you have that, then it's, you go all in. Yeah.
Right. Okay, in the interest of time, I'll pose my last question to you guys, and I'll give each of you guys about 2 minutes to answer that question. So what have you guys done well? What do you feel you guys have done well to set yourselves apart in the market? What are you doing better than, say, a traditional bank like Maybank? And what's next for you guys? Okay, perhaps we'll start off with Richard.
So I'd say, by being a fintech, a small player, you can move quickly. You just are able to innovate and think differently and bring different thought processes and procedures to the table. And I think that's probably what we continue to do. It's all around innovation, whether it's with what your products you have today or the products you have in the future. I think none of us around this table stop with what we have today. We're always innovating. So as much as a lot of our customers could potentially try and do the same thing, by the time they've caught up, and some of them are very, very kind of open and say, hey, we think we could do what you're doing in 12 to 18 months. And I'm like, that's okay, because in 12 to 18 months, I'll have done all this other stuff as well. So there is this long-term ongoing relationship you start to build with financial institutions. In the future, I think it's very exciting. The data network effects we have mean there's so many exciting opportunities to improve what we do and even provide more benefits to our customers. I think number two, the different products that we're putting on our platform, you'll start seeing evolving and new use cases coming about. And I think number three, I think new commercial innovation and partnerships, whether that's through, and I saw there's a question came through about blockchain. I don't think it's the be-all and end-all, but in certain use cases, it has true value. And one example of that is a customer we're working with who found that it was cheaper to get money and move money from the US to a Southeast Asian country than move it between two banks within the country. So that's a great opportunity of how we can play in those ecosystems. So kind of three different dimensions of what we're moving forward with now.
Right, thank you, Richard. PC, what's next for GoBear?
Let me just answer on the question on what we could do for bankers or insurance that way. So there are two cost savings that I can look at. So because I think I mentioned earlier on about how much of marketing cost that you can actually save. I think a lot of banks, you've got like 20, 30 over cards, but I'm sure there are only like 5 or 6 performing cards. So I think with that, we provide a platform or a sandbox for you guys to actually test the market before you push out any of these products out. So from there, you actually save your marketing costs, so you target your customers better on your performing cards. And for the insurers, because it's so regulated that way, I think there are also things where insurers, we all think that Malaysians are price sensitive. Actually, we're not. We actually look at coverage scores first. So say, for example, if we were to travel, Malaysians actually look at what are the premiums that is covered for, say, example, if I'm going to Osaka. Then goes down to price. So I think these are the things that we can offer. And also because we are all moving towards the fintech, we also save you the cost on infrastructure because you want to test and see what's the user behavior like, what's the user journey like before you start investing on technologies like that. So we provide that platform for players like Maybank and all the other insurers.
Awesome. Ashley.
My answer in terms of next step actually kind of have to do with one of the questions that come up also on rebundling. So I think we'll cover both. So really, I guess 3-4 years ago, the first phase of fintech is about unbundling of a bank, whereby you take one feature of a mega bank, make it better, faster, cheaper. And over 3 years, a lot of fintechs out there have come up. Some do lending really well, some do investment really well, remittances really well, and all those. But a lot of them do one thing. So, already starting to see from the start of end of last year, I think the second phase of fintech is rebundling of these services, adding more product and services, cross-selling them, and to add even more value proposition to the customer. So that's where we see it going. And in terms of MatchMove, we see our customer, we started with a prepaid card. We see that the same customers are also, wanting to receive remittances. Actually, the same people are also the one who need microloans, maybe to buy an air ticket, and then they will pay back next month. So in terms of where we see, from 3 years ago, we didn't see this, but now our vision is spend, send, lend, meaning it's a rebundling, but doing each thing well at one time and then rebundle later. So I think that's where next wave is going.
And lastly, Michele.
So what we have done well, or better than maybe some of the larger financial institutions, I would say, is we talk to customers and hear customers a lot. And to give examples, myself and my co-founders meet with customers for dinners at least once a month. We have our product team that meets with customers every couple of weeks on specific features. I spend at least 10 minutes to 15 minutes every day reading 100% of the customer feedback we receive. And if I do it, you can imagine, everybody in the company does it. So the product has been built by continuously discussing with customers and understanding what works well, what doesn't, what we can do better, etc. So what next? I would say two things. One is, while we have reacted to a lot of this customer feedback, there are things that require more time because there are bigger features, and so we are working on them. So there are a few larger changes that we're going to do in the next, let's call it 6 months. And secondly, as of today, we're only operating in Singapore, and we are starting to looking at going international. In fact, we have recently launched a waitlist website for Malaysia, StashAway.my, where you can actually register your email in case you want to know when we're going to launch.
So, ladies and gentlemen, I guess the conclusion is that there's no permanent friends or foes in the market, but one thing that is for sure is that whoever has the customer at the center of what they do, whoever is the one that gives customers the best experience, best products, that's the one that will eventually win the market. So that's all the time we have for this session. Please join me in giving a round of applause for my panel. Thank you so much to Richard, PC, Ashley, and
And ladies and gentlemen, another nice warm round of applause for Remy, Khoo, our moderator, for the final session of day one. Thank you very much, Mr. Khoo.